Welcome! Today, we are diving into a challenge that, let's be honest, comes up a lot when you're moving from Oracle HFM to FCS. And that is, what on earth do you do with all that historical, life-to-date balance sheet data? It can feel like a massive roadblock, but stick with me, because we're going to walk through a really elegant solution that solves this whole thing. So if you're planning this migration, this question has almost certainly crossed your mind. Your legacy system, maybe it's Oracle Hyperion Financial Management, or HFM, or just your general ledger, it probably holds balance sheet data as a closing balance, life to date. But FCCS, Financial Consolidation and Close Cloud, it's just built differently, and getting that data to play nice is absolutely critical for a successful project. Here's our game plan. We'll start by really nailing down the core challenge and comparing the two data models side by side. Then we'll introduce the solution for these closing balances, and I'll show you exactly how to set up the data load. After that, we'll get into the fun part, automating the calculation. And then we'll wrap up by seeing how it all comes together to bridge that data gap for good.
Okay, so let's get right to the heart of it. This entire problem really just boils down to one thing: a fundamental difference in how HFM and FCCS think about data. You can really think of it as a tale of two completely different data models.
FCCS, which is built on a super powerful database engine called Essbase, is what we call a periodic system. It wants to know the change in a value for a specific period, like a month or a quarter. Your HFM system, though, probably stores balance sheet accounts as a life-to-date or closing balance. It knows the final number at the end of the month, but not necessarily the journey it took to get there.
Now, you might be thinking, wait a minute, doesn't FCCS have a year-to-date load option? And you're right, it does. But here's the catch. It's truly year-to-date. It only cares about activity from the very start of the current fiscal year. For an account like retained earnings or fixed assets, that's a huge problem. You're just missing the entire history from all the prior years.
And the fallout from this is, well, it's pretty severe. Your opening balances will be wrong, which means your calculated movements will be inaccurate. The really powerful automated cash flow feature in FCCS, it will completely fail because it absolutely depends on having accurate periodic movements. And of course, the big one, the most fundamental check of all, your balance sheet just won't balance.
So how do we fix this mess? Well, the good news is Oracle actually built the solution right into the FCSS framework. It's this brilliant two-part approach: a dedicated place to put your closing balance data, and then a smart, automated calculation to translate it for you.
The first piece of the puzzle is this special member right here, FCCS Closing Balance Input. Its one and only job is to be a staging area, like a loading dock, for your life-to-date data. It's designed to just accept the kind of data you have in HFM without trying to treat it like a periodic change.
Now, what's really important to see on this slide is where this member lives. If you look at this visual, you can see the standard reporting hierarchy for movements. Everything rolls up nice and neat. But look closely. FCCS Closing Balance Input is sitting completely outside of that structure. It's intentionally separate, a non-reporting member. And that means data loaded here won't automatically mess up your financials, which is exactly why we need the second part of our solution, the calculation.
All right, let's get into the first practical step. Before any of that calculation magic can happen, we have to tell FCSS where to put the data that's coming in from HFM. This is a super straightforward but totally crucial change you'll make in data management. Instead of trying to map your different balance sheet accounts to a bunch of specific movement members, you make it really simple. You just map all of your balance sheet source data directly to that one single member, FCCS Closing Balance Input. Okay, so our data is now loading into the right staging area. Now we can build the automated bridge that's going to translate it. This is where something called an autocal comes in. It's basically a custom automated calculation that runs during consolidation to handle special logic. Just like this. Now, the timing of this calculation is absolutely critical. We need to insert this custom logic to run at a very specific point in the consolidation process. And that point is right after opening balance carry forward. This makes sure that we have the correct opening balance for the period before we try to figure out what the movement was. So what's this rule actually doing? It's pretty simple, really. It looks at the closing balance that we just loaded, it compares it to the opening balance that FCSS already figured out, and from that it calculates the true periodic change. Then it posts that change to the right movement member that the automated cash flow statement needs. This is it. This is the core logic. It all boils down to this simple formula. The correct movement for the period is just the closing balance you loaded minus the period's opening balance. And that little bit at the end, that plus existing movement, that's just a smart safeguard. It makes sure that if the rule ever runs more than once, we don't accidentally double count the movement. It just makes the whole thing rock solid.
And this is what that logic looks like in a real script. Now don't worry, you don't need to read every single line of code here, but you can see how it's designed to lock in on specific accounts and data sources, and then it just applies that core formula we just talked about. It figures out the movement and it posts it to the right place, like FCCS Cash. This script right here is the engine that makes this whole process work so seamlessly. Let's walk through a quick example with some actual numbers to make this crystal clear. Okay, look at December. We load a closing balance of 700. The opening balance is 0, so the calculated movement is 700. Makes sense. Now, watch what happens in January. We load a new closing balance of 800. FCSS has already carried forward that 700 as our new opening balance, so the calculation is simple. 800 minus 700, which gives us a correct periodic movement of 100. And you can see it just keeps going for February. This is exactly how we translate a life-to-date balance into the perfect periodic movement that FCSS needs. So, after we've set up our data load and we've put our custom calculation in place, what if we actually accomplished? Well, we've successfully and automatically bridged that huge gap between the two systems. And the payoff here is huge. Your old HFM closing balance data now works perfectly inside of FCSS. Your reports all tie out because the calculated closing balance matches what you loaded. And most importantly, your periodic movements are now correct, which means that amazing automated cash flow statement works flawlessly, and your balance sheet, it balances every single time. You've literally solved all the problems we started with. So here's the key takeaway I want you to remember. With this method, you're not just finding some clunky workaround for your old data. You are fundamentally transforming it into the periodic data that unlocks the full power of FCSCS. What starts out as one of the biggest roadblocks in a migration becomes a seamless, automated, and really elegant solution.